What's up, everyone? I am 7-Star Mike, and I am joined tonight by the triple OG of Flow, Charlie, and we're going to point out some of the things we saw today and how Blackbox is an advantage over some of the other scanners. We're going to give you an example of how Blackbox does things a little bit differently, but more importantly than that, we're going to show you some of the things that caught our attention so you guys get used to seeing the flow the way we do and finding those trades that we should be in. Let's take a look. We've got a few examples for you tonight.
All right, Mike, let's get started with SCX.
All right, FCX. On the screen here, we've got the 521 $35 calls. They hit it 4 times. The first one was a little bit earlier, but then the other 3 were back-to-back, boom, boom, boom. The thing we like about this one is we have a $750,000 trade, followed by $630,000, followed by $733, followed by $461. One of the things we talk about on our checklist for the flow we're looking for is the contract price. This one's a perfect example. We've got 375. The next time they hit it, they paid 420. The next time they hit it, they paid 422. The next time they hit it, they paid 430. So each time they went after it, the contract price was going up. And the dollar amounts on this one were nice. Every one of them was over, with the exception of this one, they were all over about $500,000 each time. So what happens with beginners when they see something over and over on the screen is they're not looking at the dollar amount. So they might get excited about something that has 7, 8, 9 lines of flow, but each time they hit it, it's for 20,000, 80,000, 60,000. And this is a clear difference the way they went after this one. So every time they're going after this, it's for big dollar amounts every time. The contract price was driven up every time. And that's definitely going to capture our attention as far as flow. So FCX 521 $35 calls. They hit that one for a good amount of money, pretty aggressive on the timestamp. That all happened within 22 seconds for the last 3. They were ask and above ask sweeps. So we see some aggression in that one.
Mike, let's look at AMD. There was a nice little roulette sweep in that today.
AMD, we've got 5/7 7650 calls. This was a $241,000 ask side sweep. So what we like about this one is we talk about multiple millions, and sometimes people get fixated on that. It has to be multiple millions. If it's not multiple millions, we're not looking at it. In this case, this is $241,000, but it expires this week. So even though it's not a multiple $1,000,000 trade, it's still a pretty aggressive trade for something that expires so soon. They dumped $250,000 into an option that has to move in the right direction in the next 4 days. If it didn't, this is an easy $241,000 loss. So even though it's not multiple millions, it has to move in the right direction because it's a weekly. It has to move in that direction quick. So $241,000 is still pretty aggressive. That's one of the things we look for on those shorter term trades. We still want aggression, but the definition of aggression changes a little bit. We don't need to see $20 million if it's a weekly contract. 241,000 expiring in a few days is still a pretty aggressive trade.
Absolutely. And one of the things we like, we get asked often, which roulettes do you take? We like the bigger roulettes, and especially as the week progresses. But we like those in-the-money roulettes. We say it every day, those in-the-money, aggressive, large roulettes. This just fit the bill for that one.
And if you look at the chart, after these came in, it was kind of going up and down for a little bit, and then it just started climbing towards the end of the day. The last hour, 2 hours of the day, it just started on an upswing from there. So that one's going to look pretty decent.
While we're talking about a chip company, let's look at SOXX.
All right, so SOXX, we saw some action on the 521 435 calls. So what we have here is some low dollar amounts on this one, 23,000, 48,000, 46,000, 23,000, but then we see the $792,000 block. So one of the things I talk about in the flow checklist is we ignore large blocks. So someone's going to look at this and say, wow, that's a large block. Why are you paying attention to it? But it was after a bunch of sweeps. So we see some ask side sweeps. That one's bid side, but don't worry about the bid because they're all ask under here. It's all within a pretty quick time frame. This is all within 2 minutes. That's not the block that we're going to ignore. Since there's sweeps before it, and since it's all a quick time frame, that's an acceptable block that we're going to follow. What we would ignore is if we pulled up this flow and the only line of flow was this one line that happened to be a block. But since there's sweeps before it, we're going to pay attention to that one. And this one's a little bit out of the money. So Charlie, go ahead and talk about why you like this particular flow.
Well, what I liked about this, and I didn't follow this, even though I did follow the AMD and the FCX, but because I was already in AMD, Swans, and NVIDIA, and we were trying to bottom fish a little bit today in that sector, I originally got this one. I'm so used to SOXS and SOXL. When I seen this, I'm like, oh God, they're bearish again, which we'll get to that in a second. This is actually bullish. So this is where SOXL, would be 3 times. This is 1 time bull. So I didn't follow this, but where chips go, the market goes, where semis go. So we're, hey, I sure hope this hits. But since I'm an AMD and NVIDIA as well, this is one we kind of want to keep our eye on. And Mike, speaking of that, let's go to
the spot price on this one was 409 when they were hitting it, low 409s, and after hours it's 410.83. So we're starting to go in the right direction. That's a good sign on that one.
That's a good sign. Yesterday we were a little nervous going into today, and I had swung a bunch of Q puts short. And one of the things that we didn't like yesterday was symbol SOXS. Let's go ahead and pull that one up.
So what we have here, this is a historical view. So this yellow line of flow here was 5.3. So that was yesterday's line. The white line is 5.4. So the yellow line was from yesterday's flow. The white line is from today. You want to go ahead and explain that one there?
Yeah, so with Blackbox, one of the things that we get to see is we can see them get in the trade. We can also see them get out of the trade. So in this situation, they made almost 200,000, 195,000 overnight. But that SOXS, that trade had us just a little nervous yesterday. So we were just glad to see them get out of that today. And they got out of that, with a nice profit. Good for them. But again, making the bull case for semis since they did cut that, short position. I mean,
and if you look at the contract size, yeah, so they got into 13,000 contracts yesterday. It shows 1299.9 here. So this is a clear example of what Blackbox shows that the others don't, is that we have a very clear opening position here on 5.3, and then we can see a very clear closing position on 5.4. You've got $13,000 ask side and then 12,999 bid side. So really clear example of a flip trade there. They got in yesterday, they got out today, secured profits, and Blackbox shows both sides of that one.
And he meant 13,000 contracts.
Yes.
The next one, Mike, let's talk a little bit about a few banks we were seeing a little action in today.
So BAC was the first one that came up. We have these 820 $42 calls. They came in. You can see I've got to scroll through the list here because they hit it so many times. Now, one of the things on these, you're going to see lower dollar amounts. These are all 34, 35, 37, 38,000. Not what we're really looking for, but look how many times they hit that. So many times that it doesn't even fit on one screen. And at the very bottom, what kicked it off? This is an ask side sweep for $774,000. Right after that, there's an ask side sweep for $399,000. So you got over $1 million back to back, boom, boom. This is, remember, I'm on the West Coast, so 11:16 is West Coast time. So this is closer to the end of the day, well, kind of in the middle towards the end of the day. They hit that one for $1 million. And then look at the timestamps here on these. As I scroll up through this, the whole rest of the day, they just kept hitting this. So 12 o'clock, 12:07, 12:17, 12:20, 12:30, 12:54. Remember, West Coast, so this 12:54 is right before the closing bell. So all this action on BAC came in after they had these two sweeps for over $1 million.
The next one, Mike, after BAC, look at JPM.
JPM was another one in the banking theme. So we have this sort of theme going on here. JPM, we saw the 820 $160 calls come in. This was another, the dollar amounts, 904,000, 292, 290, 290, 287, 290, 292, 297. So every time they hit this one, it's for good size. Now, where a lot of people go wrong with flow trading, they might see this many lines on the screen. It might just take over the screen. But again, each one of them is for 20,000, 60,000, kind of like the BAC after those $1 million ones, where each time they hit it is for small amounts. This one is just a clear example of decent dollar.
Ooh, I lost your mic.
That we've got the size coming through. Each time they hit it, it's for over $200,000, with the exception of this first one, which was almost over $900,000.
While we're on banking, let's look at FAS.
FAS. So FAS, they were hitting the 618, $112 calls, and same thing with the dollar amounts. We have 322,000, 302,000, 224,000, 507,000. If you look at the contract price here, we have 709, 709 again, 734, 759. So each time they hit the contracts, it's going up in value. Each time they hit it, it's for good dollar amounts per trade. That's one of those things that we're looking for, is contract price driven up, good dollar amounts going into it.
So this ETF is financial bulls 3 times leverage. So you've got them hitting the ETFs, you've got them hitting BAC and JPM. I'm not making predictions here, just showing you the flow. Looks like a little rotation in the financials today.
And again, if you look at this, where do they come in? 110.63, 110.89, 111.16. After hours, we're up to 112.12. So again, not a huge move after hours, but definitely going in the right direction. The last time they hit this was trading at 111.16. After hours, it's 112.12. So it's up $1 from where they started to, or the last time they got in. It's up even more than that the first time they hit this. So again, not a huge move, but it's going in the right direction.
Last but not least, let's look at now. And this is, again, one of the things with Blackbox that we're able to see that most platforms won't show you. On Thursday of last week, they were buying the August 530s. This was the day after ER. I believe this was even mentioned on CNBC halftime. So they're buying the 530s. Boom, 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 boom. We know it's the same buyer. Timestamps aren't on this because it's historical, but this all happened in like 2 minutes or less. Just boom, boom, boom. What happens? Stock keeps going down. They were buying this at the 510 level. Today it's going down in the 480s. So Mike, show them what happened next.
So what we have here is these are all the 530s. The yellow flow, that came in on 429. The white flow here is the 5.4, which was today. So we've got all these contracts here coming in. This is the opening down here. You can see the dollar amounts, they put a lot of money into this one. And then what we have here, this is today, we started to see the contract price coming through again, and they're ask side sweeps, but the contract price is dropping as they're coming into that. And then we see this multi-leg trade below the bid for 7.25 million. So we have a $7.62 million trade here on the opening, a 7.25. And if you look at the contracts, they closed out, if you combine these, it's about 4,000. This one's 3,500 by itself. This was 2209 on the open. So if you add these all up, it's probably going to be pretty close to what these are here. So this is an example of contracts that were opened up on one day, 429, and then 5.4, which was today, we see them closing out of these with that big multi-leg trade there. So again, the Blackbox advantage, there's a few of them, but this one is, we can see when they're actually closing out of this position. And then what we saw today was the 500s were getting some action. So going back to the historical, this one, it looks like they opened the 530s, then they closed the 530s, one of which was a multi-leg transaction, and then we saw the 500s come in. Dollar amounts, 3.24 million, 1.39, multiple millions of dollars here. So this looks like opening of the 500 contracts.
Well, there's also a multi-leg trade on this one as well, on the 500.
Let's go pull up multi-leg. There we go. I had that one missed. So that's $10.46 million on a multi-leg for the 500 contracts.
So what they did was, and I guess you could put that on one screen actually.
Well, the historical, so these are the 530s.
Yeah, you can do that. Go ahead and
okay, so take off. There we go. So now we're on all of the now flow.
Yeah. And you can see exactly right there at the 6:45 and 47 seconds where the last part of that transaction was. The 7.25 and the 10.46, just boom, right there. Same second, what they did was they rolled down. So instead of the 530s, with the stock price being at 487, they were much more comfortable being in the 500s. So they rolled down that position of the 530s into the 500s.
Now remember, I am on the West Coast, so when this says 6:45, that is not pre-market options trading. I am 6:45 West Coast. So this transaction happened 15 minutes after the opening bell. There is no pre-market trading for options. So 6:45 is West Coast time, but like Charlie said, 6:45 and 47 seconds, 6:45 and 47 seconds, same transaction. It's a multi-leg. They're closing out of the 530s that was filled below the bid. They're opening the 500s that was filled above the ask. And that's a great example of what Blackbox can do. With all the data out there, we can see exactly what's going on in the marketplace.
This is also a good example, Michael, where we talk about that checklist of the contracts going in the right direction. Those ask side 530s right before this happened, contracts going in the right direction that are the wrong direction is never going to make our radar. Each sweep is lower than the last. That is right, so never going to make our radar.
This over here, the first time they hit it was for $22.20, $21.90, $21.39. So as they're trading this contract, the price of it is actually going down. So when we see something like that, again, this is part of seat time and just using the scanner enough. If you see as a new trader, ask, 300,000, 247, 365, and you go, ooh, they're hitting it for size. Ooh, ask side sweeps. On first thought, you look at this and go, that looks like they're opening. But what captures my attention isn't that they're ask side sweeps for good dollar amounts. It's that the contract price is just going in the wrong direction. And that's one of those red flags. So if a contract that we're looking at is going in the wrong direction, it doesn't mean the trade won't work out. But probability-wise, that's just one of the patterns we've seen that typically doesn't. There's always going to be an exception where you might see flow like that and the contract price is going backwards, and then an hour later it reverses and climbs and everyone says, oh, we should have been in that. But it's always a red flag if that contract price is going the wrong direction. So we're going to miss one or two trades that look like that and then end up taking off. But by ignoring flow like that, we're going to miss out on also getting in 10, 15, 20 trades that don't work out. So I'm okay missing the one or two that look like that and end up working to avoid the 10 or 15 that look like that and don't work. So that contract price going in the wrong direction is just always a red flag for us.
And with now, we'll say, now that's all we got.
There we go. So there's a few examples of some of the things we look for, how we interpret the flow, what Blackbox does differently from the competition. And on that note, we'll see you guys on the charts tomorrow.
Thanks, everybody.
Thanks, guys.